The broadcast is now starting. All attendees are in listen-only mode.
No, yeah, not to. No, I'm not saying to make it look better. I'm saying if there's something in the algorithm that just isn't quite good, you're still researching and building a system to make sure there are going to be drawdowns no matter how great the system is. But I think just over time, they will want to make sure that the algorithm is strong. So yeah, I always agree.
Check 1, 2. Check 1, 2.
In drawdown.
All right, can everyone hear me? Can I get a thumbs up? Okay, good. Because this is a new mic and I wasn't sure. And then the GoToWebinar thing was kind of being goofy, but I hope this thing is being recorded too. All right, well, we'll just go for it and see what happens. All right, I started about 10 minutes early because before I get started, I have to go over the disclaimers. And I don't like to really just throw them up there and tell you to take a few minutes and look at them. I do like to spend some time on them because I've been doing this for almost 25 years, and I really have seen the good, the bad, and the ugly when it comes to trading. So I will go over them in a few minutes. But I just wanted to highlight, number one, today's date, February 7th, 2019. This is CFRN Thursday, where we take about an hour to go over the CFRN Trade SetUp in slow motion. Okay. It's featuring the DT Pro platform. That is the platform that I support and what you see on the screen now. Okay. CFRN, their indicator set is built inside the platform. Okay. With a few right and left clicks, you can just download them and enable them right away. I'm going to shut down my email so you don't see every email that pops in. Okay. Number one, if you are brand new, this is going to be a great syllabus for you to lean on. This will allow you to absorb what's going on in the training room because I'm going to go over the trade setup in slow motion. I'm just going to break it down. And then these are the same setups that Michael uses. And then I'm going to go inside a live market and we're going to look for that same setup and put trades on, manage them, and take them off. And throughout the next hour, I'm going to make some observations, some pitfalls and traps that people kind of fall into, especially if they're struggling. So I'm going to point them out. And the idea really is, and this will go to any of the current CFRN members, this will hopefully, open your eyes to, I didn't think about this or I didn't think about that. And hopefully we could tip the scales in your corner, okay, and get you back on the right track if you are struggling. Or, if you haven't pushed the button yet, maybe this will give you the confidence to do it, okay? So again, we're going to go over the setup in slow motion. We're going to pop into a live environment. I invite everyone to ask questions along the way, okay? And I'm going to point out some observations, and so we'll kind of go from there, okay? Again, I'm going to go over the disclaimers because I have to, and for good reason. This is a live setting. My phones might buzz. If they do, I'm going to hit the mute button and pick up the line. Depending on who calls, depends on how much time I spend on with them. So, again, I apologize in advance, but go from there. All right, enough said. Disclaimer. Here it is. Okay. In a nutshell, this disclaimer is really meant to scare the guys that are brand new to our space. Okay. Basically, it says you can lose everything and some in your trading account. Okay. And that the funds in your trading account should be risk capital. All right. Now, if you don't have a trading plan, if you're not using stop losses, if you're not engaged in the market, okay, you're not in front of the screens, if you kind of turn your back to what's going on and you're not sure about, when and where and how the news really affects your position, basically this disclaimer is going to hit you right smack dab in the face. Okay? That's the nuts and bolts of it. Okay? You can lose everything and some in your trading account. Now, you're going down the CFRN path. Okay? The good thing about that is that we are going to talk about this, right? But you are going to have a trading plan. You have 4 set of rules, right? You got a stop loss. Every trade has an 8-tick stop attached to it. You're on a 4-tick range chart, right? So you really have to be in front of the screens. You have to be engaged in the market, okay? One of the rule sets that you'll learn right on day one is you're not going to trade around news reports, so it kind of eliminates that, all right? So even though the disclaimer is out there to scare people, okay, if you do go down the CFRN path, okay, you are going to water that down a little bit, okay? However, there's the other scary part of it. In the end, if you're doing all the right things, okay, you place a stop loss, you're in front of the markets, you're engaged in what's going on, okay, if something goofy comes out, something newsworthy, okay, the market actually could run and hop over your stop loss, okay? That means you could be in a position in the market with no stop loss, okay? That is the worst case scenario. The good thing is being in front of the screens and being in front of this tower that we buy and sell on, okay? If the worst case scenario pops up, you can hit this button right here. This is exit at market and cancel and get the heck out of Dodge, okay? That is the worst case scenario. So it is a warning flag. I do talk about it. I don't like to throw it up there, tell you to take a few minutes to look at it and then throw it under the blanket. I do like to talk about it because I've been doing this for 25 years. Okay? Generally speaking, the people that have traveled to the CFRN space, they're numb to this thing already. They've been to this guru, this market, this trade room, this, that, this indicator set, okay? They've been there. They're numb to it. So this, really doesn't bother them, okay? That's just been my experience into talking to people over the 8 or 9 years I've been associated with CFRN, okay? So really, again, the disclaimer really is out to scare the new people. And for good reason, because, you could lose everything and some in your trading account, and the risk capital the capital in your account should be risk capital, okay? It should be capital that you can afford to lose and not change your lifestyle. Nobody likes to lose. I don't either. It does happen. There are losing days. There are losing trades. That is the truth about trading. Okay, you will not find something that's 100% out there. And if you think if there is something, you're just not going to find it. Okay, I've just been around too long. Okay, all right. That was the long-winded explanation about that. Now my relationship with CFRN. Okay, CFRN, they are the educator. It's their indicator set. Okay, their indicators are built inside the platform, as I said earlier. Okay, so again, these are their indicators inside DT Pro. Okay, I support the platform. I support the brokerage if you decide to go down that route. The execution, I can turn on and turn off the indicator set. No, I don't have the keys to that car. I have to actually ask CFRN to say, hey, you know what? Is Gary a CFRN member? And they have to give me the thumbs up before I can flip the switch. If troubleshooting the platform, downloading the platform, it goes as far as a hand raise. Hey, I am not sure about what Michael is saying in the room, Or it could be, hey, you know what? I took a few trades today. I want to share you the trades that I took. I'm going to send you a screenshot. Can you critique what I did? Yep, I'll do that too, in between phone calls and other stuff. Okay? So really, it goes beyond, above and beyond just the execution and the brokerage part. I mean, I do the CFRN Thursday every Thursday for 1 hour because there was a demand for people to say, you know what, things are happening too fast in the training room. I need help. Can you help explain? There's a mutual benefit, right? If you do well, I do well. And the idea was, you know, if a few people have the same question, probably everybody does. They're just not raising their hand or not telling anybody. So I took an hour to do this. That's what I do. And you know, if you go down this path and you come over to Daniel's Trading, we kind of spoil you here. At least you know when you call the desk, I'm going to pick up. I know the setup, I know the platform, and God forbid if there's a problem with your trading account, I have access to that too. Okay, so it kind of fits. All right, if it's relative to the training, you know, hey, I want to be a CFRN member. Well, the money that you exchange is going to be between you and CFRN. Okay. Anything on their website, you're going to reach out to CFRN. The members area, the videos, the workshops, logic, daily double, the concierge trade alerts, all that stuff. If you have questions about it, reach out to them directly. Okay. Now, a lot of times, Dwayne's on the radio. Dwayne's doing the one-on-one mentoring. Mike's doing his thing. A lot of guys will reach out to me. 90% of the time I can answer the questions. Some guys will just call me up and say, hey, can you tell Mike or Dwayne to give me a call? It could be just as that, and I could text somebody. Okay? So really there is a line between Bert from Daniel's Trading and CFRN. I'm in the room every single morning. I do not work for CFRN. I work for Daniel's Trading. Okay? I just know a lot about what they're doing, and I actually believe in it. And I actually use it in my own work. And I normally do that on larger time frames. Okay? So that's the scoop. Now, I told you my phone would ultimately ring here, so I'm going to put you on. I'm going to hit the mute button and pick this up, and I just got to figure out how the heck to do this. All right, they hung up, but you know someone else is going to call. Okay. All right, so anyways, that's what I have to talk about before we get into any of markets and all that good stuff, okay? The two disclaimers. So hopefully that cleans that up. All right? All right, here we go. Guys that are brand new, this is where you're going to learn a lot, okay? Because I'm breaking down what Michael's doing in really in first gear here, okay? So you'll know the setup, and you're going to hear some of the buzzwords. So when you do go into the training room, they're going to register a little bit further, okay? So the first order of business is the time frame, the 4-tick range chart, all right? So the question is, I have DT probably, how the heck do I get there, right? Chances are you're on a 5-minute chart. You might be on an hourly chart. Heck, you might be on a daily, right? The idea is to get it down to a 4-tick range. Top left-hand corner of the chart, just hit this drop-down box and go down to custom. Okay, the box will open up, and you're going to select the range bar and make that one look like a 4. And just hit OK. Okay, you're looking at the S&P right now on a 4-tick range chart. Okay, one of the big traps that people fall into, they go down to custom, but they select the tick bar and change that 2 to 4. If you're staring at something like this, this is just dead wrong. Okay, you know you fell into trap number 1. Get on the range chart. Okay, the R in parentheses is the hint that you're on the right time frame. Okay, 4-tick range. Okay, now something about the 4-tick range. The height of each candle is 4 ticks in height. Okay, some look bigger, some look smaller, but in the end, they're all the same height. Well, why? Why use this? Here's the thing. When Michael is calling out the highs and the lows in the room, okay, especially if you're new, you're kind of wondering what's going on, right? He's calling the highs and the lows. He's getting ready to place an order. He's being proactive, all right? Because he knows the height of each candle, okay, he can be proactive or predictive in placing an order. So when he's doing that, he's actually buying it above the market or buying it on a stop, or he is selling it below the market or on the stop, okay? That's what he's doing, all right? So in some of those trades, you might see, where it bangs off the BBC here and then falls apart, and you're like, how the heck did you get into that one? Well, he stopped himself into the market, okay? So if the market does break through, breaks down, he's got an order in to kind of enter him on a sell stop. So if it does break down, he's going down with the momentum. And then conversely, if he's got an order in above the market and everything's qualifying and the market blasts off, he's got an order in to enter the market at a buy stop. He's going to go up with the momentum. Okay? So he's buying it on the stop and he's selling it on the stop. That's going to be his entry. All right? So again, the 4-tick range, Michael can be proactive. That's how he is. Okay? And when you start hearing the highs and lows being called out, he's getting ready to place a buy stop or a sell stop above or below the market. Okay, so that's what's going on when you're hearing that. Okay, if you want to know the equation, it's very simple. Whatever the high or the low is, add or subtract 5, and that is the price you're going to click on. And when you're clicking on it, you're going to be right-clicking. Okay, you'll be right-clicking. So it'll look like, if I right-click here, notice I'm entering buying one on a stop at 26.97. So watch. When I place that, notice how I'm not filled. Okay? It's not going to fill me until it gets through 26.97. Okay? And the same holds true. If I try to get short below the market, you go inside the red because that's where we buy and sell off the DOM, and you would right click. Notice how I'm selling it on a stop at 26.89. Okay? It will not fill it until it breaks this level. All right? Enough about the 4-tick range, but that's where it all starts. That's the magic time frame. Okay? All right, now we're going to talk about the top portion of the chart. Okay? So here we go. Oh, great. All right, one sec. Okay. I told you that's going to happen. That might happen a few times here. All right, so we're going over the top portion of the chart. Okay, so here we go. This red and blue line is referred to as the MA1. Okay? The green line is referred to as the BBC. That is short for bullish and bearish cross. Together, when the MA1 crosses the BBC, that is step number 1. Okay, when the MA1 crosses the BBC. If the MA1 is red, you're looking for selling opportunities. Okay? If the MA1 is blue, you're looking for buying opportunities. Okay? The one that's highlighted here, that is a bearish cross. So you're looking for selling opportunities. Note that I didn't say go long, go short, go long, go short. I said you're looking for shorting opportunities because that kind of leads us into step number 2. Okay, and step number 2 is this. After the cross, the normal thing for the market to do is to gravitate toward that BBC, that buzzword, okay, the green line, okay? The normal thing for the market to do is to gravitate toward the BBC, all right? That is what we're looking for. We're looking for the market to do the normal thing. So once it ultimately comes back and touches the green line like it does in then this candle, and then closes in the direction of the trend, highlighted by this arrow, that is step number 2. The touch and then the close in the direction of the trend. Okay? Now notice, the MA1 is red, the candle better be red. Okay, that's what you're looking for. Down the road, that is going to be the common denominator. If you want to stack all the probabilities in your favor, you want everything to be the same color. Okay? If we have a bullish cross, you're going to be looking for a green candle or a blue candle, depending on how your charts are framed up. Okay? So again, bearish cross lights the match. Okay, we're looking for a selling opportunity. We're looking for the market to do the normal thing, pull back to the BBC, and then close in the direction of the trend. That is step number 2. Okay? After that, our eyes now gravitate toward the slingshot. This is the slingshot down here. It's the oscillator portion of the graph. Okay? And the trade exists down here in the slingshot. Okay? It all exists down here. Okay? And so here are the buzzwords inside the slingshot. The blue and red line is referred to as the cycle. The green line, well, it's just, there's nothing special about it. It's the green line. But here's what it's telling you. Okay? It is telling you the cycle is red. It's pointing down. It's saying, look, on this range, 4-tick range in this market, we are heading lower. That's what this is saying. Okay, this is giving us a direction. So with the red cross, red MA1, a red candle, and a red cycle, everything now is the same color. Okay? The green line pulling away, this action here, along with this price action up at the BBC, the normal thing, right? The market's doing all the normal things. Okay? Market action up here combined with the green line pulling away, that is the separation or the divergence that Michael is talking about in the training room. Okay? The green line pulling away. Okay? If it's a bearish separation, the green line is above. If it's a bullish separation, okay, the cycles turn blue. Okay, we're looking for buying opportunities. The green line should be underneath and pulling away. Okay, it's telling us that now this is in an uptrend, right? So this is giving us direction, and this is saying, hey, this price action, the normal thing combined with the green line pulling away, is saying, look, this might be just a pullback in this ongoing downtrend. And what we need to do is get short. That's what it says. So when that's present, what we would end up doing is going into the DOM. Okay, that's the depth of market here. All right, this is where we buy and sell. And we would actually left click in the red and get short. Okay, and if the market moves down, that's how we make money. Okay, and conversely, if it's a buy setup, we will left click in the green and we make dough if the money market goes up in our favor. Okay, so that is the game plan. Okay, that's what we're looking for to enter the market. Now, the question might be, well, when do we get out of this thing? Okay, when is it time to take profit? The time to take profit is when, okay, is here. The cycle is trending lower, green line's pulling away, and ultimately what we expect to happen is the green line to get into the cycle and touch it. When this happens, that is the time to cut the trade loose, because we expect the market to make a new pivot low. Okay? The market's making a new pivot low along with the green line. When these two things are touching, the green line and the cycle right here, we're getting the heck out of Dodge. And as I said earlier, everything, the trade setup's down here in the slingshot. Because what we expect to happen is the green line to do what? Pull away. Pull away. Pull away until the cycle turns blue. And we get a bullish cross. And the green line is underneath. And the green line is underneath. Okay? So as long as the market is trending, that's a key word that I'm going to go over this afternoon. As long as we're making lower lows, or on the upside, we're making higher highs, what you end up doing, in the end, is selling this top, selling this top, selling this top, or buying this dip, buying this dip, or buying this dip. As long as we're trending. That is the key. Nothing, we do absolutely nothing until we identify that the market is trending. Okay? And as advertised right here, every trade has an 8-tick stop attached to it. So if you are trading crude or the gold, if you're dead wrong, you're risking $80 a contract. If it's the soybeans or the S&P, it's closer to 100, and if you're working maybe the mini Dow, it's $40. Okay, if you're dead wrong. Okay. So in a sense, when you sign up for CFRN, and you're wondering what the heck this is, you're not learning to pick the top, and you're not learning to pick the bottom. You're learning to take a piece out of the middle. Okay? And along the way, you're going to trail the stop, trail the stop, trail the stop until it's time to get out. That's the game plan. Okay? Now, there's some money management rules that come into play. I'll go over those when we get into a live setting. Okay? But generally speaking, okay, you're going to be trailing the stop to your break even or entry when the market goes 4 ticks in your favor or closes on the other side of the MA1, depending on the direction you're going. I'll go over that, okay, when it comes time to push some buttons, okay? So again, you are signing up to scalp the market, okay? You're on a 4-tick range, right? So you're looking at the market under a microscope. You're using an 8-tick stop. You're using aggressive risk management. So you're trading for ticks. You're scalping. You're going to have a lot of trades. You might have a lot of break-evens. And you know what? You're going to have to be in front of the screens, okay? You're going to have to be engaged in the market, okay? So that's what you're signing up for, okay? All right. Enough of that. So now we're going to go into the live setting. So let me shut down my live. I'm in demo mode just to be fully transparent. Okay. So here we go. First thing that should be on your piece of paper, okay, when you're looking at the markets are we trending? Okay. Are we making higher highs or lower lows? Okay. So I'm on the ES chart. Notice the first thing I did was zoom out. I hit this red magnifying glass. Sometimes you get hypnotized by Mike's charts. You know, they're pretty blown up pretty good. What I want you to do is get in the habit of hitting the zoom out button because you'll see a little bit more of what's going on. Okay? Whether we're trending or not, you'll see a little bit more real estate. Okay? Notice how I zoomed out 2 or 3 clicks. Okay? We are making some lower lows. So right now, the ES is trending. Okay? Notice a few things that pop up right away. Here's the bearish cross. The MA1 is red crossing the BBC. What do we expect the normal thing to happen? Market gravitate toward the green line and then look for a down close. Okay? What do we expect to happen? Market gravitate toward the green line or the BBC. You're looking for the down close. Okay? So that is what you're looking for. Right now, there's no trade setup. You might say, hey, There was the down close against the BBC. Okay. What color is the cycle? It's blue. Right away, an alarm should go off in your head and say, you know what? You're watering down the probabilities when the cycle is turning color on you. Not only that, look at the slope of the cycle. It's at a 45-degree angle against you. That's one of the biggest traps that people fall into. Okay, they get so anxious to get into the market and find a place to get short. Okay, they're looking at the green BBC line. They see the down close. They see the separation down in the slingshot, right? The green line is below the cycle, but they forgot to take a look at the 45-degree angle against them. Faced with this, that's a big fat disqualifier. Okay, wrong color tells you you're watering down the probabilities, but if it's going against you at a 45-degree angle, no trade. Okay, so two things we just covered that might not have just popped up in front of you that disqualify trades. Number one, if we're not trending, no trades. Number two, we look for the market to do the normal thing, which is pull back to the BBC. Okay, if it's blue, it waters down the probability. If it's blue and going against you at a 45-degree angle, that's the second disqualifier, right? And that's one of the biggest traps people fall into. All right, so let's go over a few more. Hopefully we find something we can push a button in. Let's look at gold. Are we trending? No, we're not trending. Okay, this one's an easy and obvious one, okay? Okay, we are stuck sideways. We don't do anything. No action to be taken, okay? If you're unsure about whether we're trending or not, dynamic support and resistance will help you out. Notice how they're side by side here, okay? They look like a pair of choo-choo tracks side by side. That's your first indication we're trading sideways and no action. Stand at parade rest or go to a different market, okay? Nothing's happening, all right? Okay, let's move on to the metals or the energies. Let's go to crude oil. Okay, first question we always ask ourselves, are we trending? Answer is yes, we're making higher highs. Yeah, good answer, Arlene. Okay, so now what we're looking for is the market to do the normal thing, which is pull back to the BBC. Now, here's the second thing I want you to do and get in the habit of doing. Number one, hitting the zoom out button, right? We're clear on that? You're hitting the zoom out button to see whether or not we're trending. If you look at Mike's chart sometimes, okay, they're going to look like, hey, they might be trending. But if you take a minute or a second or 2 seconds to click out, you might find that it's bumping its head or against resistance or support that you didn't see without zooming out. That might be the difference between you making money or not, okay? So please get in the habit of zooming out. The second thing I want you to do, as soon as you identify that the market is trending and we have a bullish or bearish cross, okay, step number one, your next order of business is to activate this trend line right here. Okay, right here, left click. Okay, you got to get in the habit of doing that, and you'll see Michael do it a lot. He's always drawing trend lines. There's two reasons. Number one, we never know after the cross that the market is going to do the normal thing. This did the normal thing. It pulled back to the BBC. You don't know that. This is after the fact stuff, right? But in real time, you're just watching it, watching it, watching it. So you have to start drawing a trend line. Because here's the thing. If it doesn't get back to the BBC and take off, kind of like it did right here, didn't quite get to the BBC, got really close, and then took off, it's time to take action because the market's telling you, look, it has so much momentum, it can't even do the normal thing and get back to the BBC. Okay? Just remember, if you do that, it's got to qualify down here in the slingshot. Okay, don't ignore that. You got to go through the motion still. Okay, so that's why you draw the trend line. Number one, we don't know if it'll get to the BBC. All right, but number two, if the cycle turns color on you, as it did here, okay, we're getting in the habit, we're drawing. If this cycle turns color on you, number one, it waters down the probability, but number two, now it has to close above the trend line before we take action. So if you're already drawing the trend line in advance, you're not fumbling around after the fact trying to draw a trend line. You're already in a position to take action. All right? So here we go. We're doing the normal thing, pulling back to the BBC. Okay? We've touched it. Is this good for the home team if we're looking for longs? No. Two things stick out. It's red, waters the probability. But number two, it's going against you at a 45-degree angle. Big fat, no action. That's the disqualifier. But now you're saying, Bert, it's taken off. We would have made tons of money. Most of the time, it won't. Okay? So faced with that, there's no trade. Okay? All right, so hold on. Let me try to get this pencil. Let's delete the trend lines again. Okay? All right. Usually this means we're going to do a cycle reset. What does that mean to me? Well, that means basically this. The market's going to retrace. It assumes that the market isn't going to go straight up or straight down, right? It's going to say, I want to retrace before we go in the direction of the trend. Okay, that's what that suggests. Okay, now crude has to do some business here before we can get excited about taking some action. So let it filter out. Okay, we'll move on to a different market. Okay. All right, so hold on. That's my phone buzzing. All right, so the crude's a little bit confused right now, so we're going to let that go. Let's move on to natural gas. Okay, natural gas on Thursday. There's an AGA report. That's a supply number. I know that's going to move natural gas back and forth. All right. First question we ask ourselves again: are we trending? The answer is Arlene. Anybody? The answer is no. We got some lows here right now. Look at dynamic support and resistance side by side, suggesting sideways action. Okay, I will say this. If natural gas starts closing below dynamic support, we will get short the natural gas. Okay, so for the moment, natural gas is off the table. No trades unless natural gas breaks down. Okay, we're all clear? It's sideways. All right. I'm going to go to the currencies. Again, are we trending? Yes or no? Your answer should be no. Double bottom, double top. Dynamic support or resistance are right smack dab in the middle. Okay? So the euro is not trending. Okay? Get in the habit of doing what? All right, thanks, Arlene. We'll take a look. Get in the habit of zooming out. Okay? Sideways here, finally started trending. ES is starting to trend again. Notice the first thing I do, 1, 2. Arlene, be careful. I agree, we're trending. But look at, we fell off pretty hard up here. But you're right. So let's look for this pullback to the BBC. We're looking for the market to do the normal thing, pull back to the BBC. Okay? What do? Activate the trend line. Get ready to draw a trend line, right? So let's see what happens. Okay? Remember, 1, 2, this is an issue here. Be careful. We've sold off a few times off of this level. Okay? Okay, we're looking for the market to do the normal thing, which is pull back to the BBC. If that happens, in the process, we're going to draw a trend line. I'm going to show you how I draw it, because that's the way you should draw it. And then if we do get long, what we're going to end up doing is left-clicking in the DOM. Left-clicking. And that will be left-clicking in the green. That's what we'll be doing, okay? Now, while this is kind of formulating here, notice the DOM, depth of market. If I click this Tinker Toy triangle on the top, notice how the bottom of the DOM opens up. If you select buy stop and sell stop, and you right-click and hit factor in ticks, and you right-click over buy stop and hit factor in ticks, if you have 8s as your factor, what that will tell the market to do as soon as you enter the market, if I'm entering the market, it's automatically going to put a stop loss 8 ticks behind your trade. Okay, so that's one less button you have to click, which is good when you're in the heat of battle. Okay, all right, so now we're trending, right? We're coming back down. So this is how your trend line should look. Is this a good thing that the cycle is red? No, it's watering down the probabilities. What does that also mean? That means we have to close above the downtrend line before we take action. Okay, so now we're waiting. All right, so check this out. If the low is 26.97, then the high has to be 98. Michael would right-click at 98.25. That's how he's being proactive. Okay, because if we get to 98.25, it will print a new candle, and yes, it will be closing above the downtrend line. Okay, that is how he's being proactive. Okay, remember the low is 96.7, then the high has to be 98. So 98.25 lights the match. Okay, that's the close. All right, so there is the long entry on the close of that candle. Okay, as I said, 2 things. This waters down the probability. Okay. Number 2, the other thing I said, zoom out, zoom out. This is a problem to me also. Okay. This resistance here. Okay. I took the trade anyways just to show you how to be proactive in the DOM, how to place an order. All right. And here's our stop loss right behind it. Okay. That's the number 1 right here. So if this market goes up, goes plus 4 ticks in our favor, or closes on the other side of this MA1, the MA1 is that red and blue line, we're going to take the DOM, left click over that one, drag and release. Okay, we'll end up dragging and releasing. That's how we're going to trail our stop. Okay, but it's got to go up first, 4 ticks in our favor before we can get long. Okay, so let's see what happens. All right. Again, the red cycle required us to draw the trend line. Okay. And it closed above the trend line was required before we can get long. Okay. Now, what do we expect to happen? The green line to pull away and get into the cycle. All right, so now I'm moving my stop up to the entry. This is a break-even stop. Okay. If the green line gets into the cycle, we're just going to cut loose the trade. Okay, so let's see what happens. Waiting for the green line to get into the cycle. In the process, we're taking the risk off. Okay, I dragged the stop up. Okay, so let's see what happens. Okay, that was the close here above the MA1, and we're definitely 4 ticks in favor. Okay, so this is our stop loss, and this is our entry right here. Okay, if you're not sure, this will tell you you're long. Your P&L's moving. There's another place where it tells you you're long. It also tells you long on the chart. Several places where it tells you you are long this market. Okay, and that's your stop right here. Okay, you know, something else you guys should get in the habit of doing. See where it says trading up here? See where it says positions and order management? You really should have this working tabs open, working orders tab open. This will also tell you that you have a working order. Notice when that stop got elected, the working orders tab disappeared. The reason why that's important, okay, is if you get out of a trade and you think, man, I'm done with this trade, I'm good to go. If you have any loose ends or loose orders, it's going to be in here. Okay, so if you don't have this up in the background or, you know, minimized or whatever, this is one of the big things you should have up. Okay, because this will tell you whether you have something loose or not out there. Okay, so basically, this is what Michael would do. Get in here. Basically got out here. The result was basically a break even, plus 1 tick. Okay, nothing to shake a stick at. All right, basically that was the result. And when he's marking it up with a yellow arrow, he's telling, hey, I got into it, good or bad. Okay, so you guys all understand why we did what we did. Now, honestly, guys, there's no way I would have pushed that button on that trade. Okay, because my concern was this resistance here. Okay, and you notice, okay, it's giving you grief because of this sell-off. Okay, so that's why I said, you know what? This looks juicy, right? Blowing up. And this is probably what you're looking at inside the training room. But if you take a moment to go 1, 2, 3, okay, you're going to see more of a landscape of what's going on. And you might see some prior support and resistance that might convince you, you know what, maybe I shouldn't be pushing the button. The good thing about that trade, it allowed me to get inside the DOM, okay, show you some other things, so we can, you know, create some value inside this next hour, okay? All right, let's move on to natural gas. Did it break that low? It did not. So natural gas right now is not trending, okay? If you came in late, dynamic support is printing. It's side by side against resistance. That's a first clue. We are not going to take any action, okay? The number one thing that should be on your piece of paper, the market needs to be trending, period, okay? All right, crude oil. Are we trending? Are we making higher highs? Notice the first thing I do is zoom out. Pretty easy and obvious, right? We're making higher highs. All right, so once we've established we're making higher highs and we have a bullish cross, right? And that means if you're brand new, okay, the MA1 is blue and crossing the BBC right here. Okay, that lit the match. So now it's time to engage the trend line. That's your next order of business. Okay, we're looking for the market to do the normal thing and pull back to the BBC. Okay, that's what we're looking for the market to do. All right, so let's see what happens. And I'm going to point something out. There's 2 things that I see already. I'll make a good observation, especially you guys that are already members. Okay, so I'm hoping it pulls back here so I can give you some good stuff. Okay, so we're waiting for the market to do the normal thing. If you're brand new, is gravitate toward this BBC, and in the process we engage the trend line. Right, you're going to get in the habit of drawing the trend lines. That's what we're going to do next. Okay, so let's see what happens here. Hopefully it shakes out here a little bit so we can do some. If it lays here, we're going to just get out of the crude and move on to the next market. Okay, we want to see as many examples as possible. Okay. I'm going to give it like 1 minute. I know I'm not giving it a ton of time, but if it doesn't, I'm gonna make the observation. Okay. So stand by. Guys, if you have questions, pop them in. Okay, especially the new guys that I see in the room. Okay? Because this is going to be your syllabus going forward. This is some of the stuff that Michael might not cover in the room because his goal is he's got 2 hours to get a goal. Okay? Hey, Gary. All right. So let's see what happens. Come on. Let's have it down close. We do have the separation, right? Notice the slingshot here is blue. That means that's okay to get long, right? As long as that's blue. Okay, that's good. The green line is underneath. That's the separation we're looking for, the divergence that Michael is talking about in the room. Okay? All right, it's just laboring here, so I'm going to go over the 2 points. Number 1, okay? The crew better make a higher high before you take action because now we have a double top. Okay? You may not see that now because you're looking for it to do the normal thing. 1, 2, you have a double top. Be careful. Okay? The second thing, okay? This will go to the guys that have been in the room for a while. Zoom out, zoom out, zoom out, and here's the point. The bullish cross started here at about 12 o'clock this afternoon, about an hour and a half ago. Okay? This thing has not had a pullback, all right? Hasn't had a cycle reset or a decent pullback inside this uptrend. Okay? My point is this. After the cross, usually the first or the second or maybe the third are going to be your best setups. Okay? 4, 5, 6, 7, you're asking for trouble. Okay, so let me repeat that. This cross started about an hour and a half ago. That's a lot of time. Okay? Your best setups are usually the first, second, or third after the cross. If you go, again, 4, 5, 6, 7 deep, at some point this market's going to retrace. At some point you're going to have the cycle reset. Okay? Fast forward to what's happening right now. Okay? Your trend line should be drawn like this. On top of the 2 wicks. Just like that. I had that question the other day. Okay? We draw the trend line for 2 reasons again. We don't know if it'll get back to the BBC. And number 2, we draw the trend line because the cycle turned color on us. Okay? If we want to stack all the probabilities in our favor, we want this to be blue and stay blue. Okay? It's not. It's a different color. All right? The other thing I pointed out, we better make a new high because now we have a double top in place. So actually, we're really not trending right now. Okay? A decent pullback. Okay? I talked about, okay, this thing being a little long in the tooth because we had a Polish cross that started about an hour ago. Okay, way back here. A decent pullback would be violating the green line, the BBC, and pulling back. Okay? In other words, we might even get a bearish setup before then we get another bullish setup. Does that make sense, Arlene? All right? Because right now, our blinders are saying we should be buying dips, buying dips, buying dips, right? Okay? When I'm saying a decent pullback would be, hey, the MA1 actually crosses the BBC. We actually get some kind of a sell signal, okay, in this big uptrend. It's called the cycle reset, okay? So don't read into it so much, okay? Just the takeaway on that would be, look, find the setups, draw the trend lines, zoom out, do all that stuff. But in the back of your mind, as you get going here, okay, if the cross happened a long time ago, but let that echo in the back of your mind. Like, you know what? Bert said something about that on June or February 7th. All right. So you can't absorb everything right here, right now, at all times. It's something you can write down. Okay. After a while, you're going to say, he was right. Okay. It's going to pull back and I should be careful. All right. So it's just laboring here. We'll come back to that. Natural gas, sideways. All right. Let's go back to the indices. That seems to be okay. So this is where we left off. We actually took this one here. Okay. Notice how this is curling over. Okay. Right now, we're going to do nothing in the S&P until it makes some higher highs or some lower lows here. Okay. Let's go to the gold. Are we trending? Notice the first thing I did, zoom out. That's what you should be doing, zooming out. Okay, we're trading sideways in the gold. Okay. Nothing to do. Okay. Let's go to the euro. Again, that's a market that's trading sideways, a double bottom and a double top. No action. Big fat disqualifier. Let's go to the British pound. Zoom out. Are we trending? Yeah, we're making some lower lows here. That looks okay. For a moment, we have a double bottom here. So let's stand at parade rest for now. Swiss franc, another market that's trading sideways. Notice, here's something that a trap that people will fall into. Double top, right? Doing the right thing, hold off, and then all of a sudden you get one of these. Okay? Hey, we have a higher high, higher close. All right? Next thing you know, we fall apart here, right? And you got some dynamic resistance printing. Okay? Be careful with that. All right? Just poke above, and then it gives it all back on the next. Okay? That's not necessarily trending action. You want that to spend maybe a little bit more time above that. Okay? That comes with a little bit of experience, learning the personality of the market that you're trading. Okay? In the end, a big question I always get is, hey, what market should I trade? And hey, should I be following 5 or 6 different ones that Michael's doing? The answer is follow as many as you can. Okay? Get as many examples as you can. Okay? Get absorbed. Get in front of the screen time. Get all that stuff in front of you. Okay? Ultimately, at some point, you're going to gravitate toward those markets that you kind of understand and fit the person, that kind of fits your personality. Okay? In the end, that's what's going to end up happening. All right? And so you'll pick up on these little things. Oh, you know what? The Swissy likes to do that, so I've seen that one before, so I'm not going to take it. It's a head fake. Okay? Canadian, sideways. Going back to the natural gas, sideways. Sorry, I'm trying to find stuff that we can take action on. There's the crew that is falling asleep right now. I'm just going to go to the indices. Okay. Let's try the Dow. Well, of course, the Dow is double bottoming now, so. Okay. Okay, let me show you this. We were trading sideways here. See the double bottom here? And then we started trading below it. That's the action you want to see. Okay. That is trending action the first time down. Okay. We start gravitating toward the BBC. You don't know if it's going to get there. If you're drawing a trend line and you have two bodies like this, you're going to draw them on the corners of the body best you can. Okay. And again, the reason we do this is because we don't know if it'll do the normal thing and get back to the BBC, right? That is the down close. And we have the bearish separation. The cycle is red, same color. The green line is pulling away. Right here on the close of that candle, after it trading sideways here, activated, let the match to the short side to the downside, okay? And then we ultimately went down and tried to make a new pivot low. In the end, it might have given you a few ticks, okay? But since the market's confused here, we'll just let it roll here. Okay, now, we just made a lower low here, okay? See what happens. We came right back here, so let's see. I'm not calling that trending action unless we get a few more candles below. All right, so we have some lower lows. The cycle down here is a mess. Okay, if we're going to get short, we need this green line to get above it, right? Okay, so it's starting to flag. Starting to do the normal thing. Okay. Is this a good thing? That is not. It's blue, waters down the probability, and it's at a 45-degree angle. No trade. Okay. That is the first down close right there. Third disqualifier just hit us right in the face. It's when the BBC and the black step line crosses the BBC. Boy, is that messy. Hold on. When the black step line crosses the BBC. That's the third disqualifier. Okay, so number one, not trending, trading sideways. 2, it's the wrong color. Okay, and going against you at a 45-degree angle. And the third one, that black step line is crossing the BBC. There's 3 things. Usually when this thing is happening, you'll get the black step line crossing the BBC. Okay. All right, I wanted to show you the trend line drawn and that disqualifier there. Again, that's one of the big traps people fall into. Because you're so anxious. I need to get short. I need to get short. The market looks like it's going to fall. And then you forget about what's going on underneath and whether we're trending or not. Okay. S&P kind of did what the Dow did, right? Pulling back to the BBC. No down close yet. No down close yet. And the black step line is now into the BBC. Okay. That's the disqualifier there. Okay. Okay. Here we go. This is the crude oil. Your trend line should be drawn like this. Okay. We draw the trend line because we don't know if it'll get back to the BBC. Okay. The trend line is required. Why? Because the cycle has turned red. Okay. This is an up close. That is a buy. Okay. I'm telling you, you should not buy this. The reason is, as I said earlier, we have a little double top here. Okay, don't get hypnotized by that. Let's let it make a higher high. The fact that we have a double top, really, if it does take off, could really result in a huge trade. Okay, but it's got a double top there, so be careful. And the other thing, as I pointed out earlier, okay, scroll back. The cross happened over here at 12 o'clock this afternoon, almost 2 hours ago. All right. So at some point, I expect market's been trending, right? I'm expecting at some point she does one of these, okay, before she makes another move up. All right, so again, that has all the earmarks. This has all the good variables to get in here, right here, and get long, okay? But this is a warning flag, and also, too, this is flat, right? We don't want flat cycles. We also want a cycle that's pitched or sloped, okay? All right. Natural gas is breaking out of that range. Maybe it's a buy signal. Okay. Again, notice how I zoomed out. And we're going to bump our head up against a little bit of resistance here, so we got to be careful. There's better opportunities, I think. All right, let me add this point. You like the NASDAQ, okay? You're a NASDAQ trader, but man, on a 4-tick range, it just moves too fast, right? Look at the action. The reason why you're here is you're getting to learn the personality of the markets that you're trading. You can't trade this on a 4-tick range. So here's your solution, okay? What you're going to do is you're going to go from a 4-tick range chart to an 8-tick range chart, okay? This is popular with the NASDAQ. It's also popular with the Dow, okay? The reason why you'll do that, it will slow it down, okay? The same rules that we went over earlier apply, okay? Same rules. The only difference is your stop loss now is an 8 ticks. Your factor now is 16 ticks. Okay, the risk is commensurate to the time frame that you're trading. Okay, so if you're on an 8-tick range chart, you should be using a 16-tick stop. If you're using an hourly, well, you know what? You should be using an hourly stop loss. If you're using a 30-minute or a daily, it should be commensurate on the time frame you're on. Okay, just an observation here. We're looking at the S&P on the daily. What is the normal thing for the market to do? Pull back to the BBC, right? That's the normal thing for the market to do. Bullish cross. After the cross, it should gravitate toward the BBC. In the process, we get in the habit of drawing a trend line. Okay, that is the close above the trend line. Is the cycle blue? Absolutely. Is the green line underneath? Absolutely. What do we expect to happen? The green line to get into the cycle. At what point do we take profit? Boink. What do we expect the green line to do? Pull away. Okay. So, yes, you can trade on 4-tick range charts. Yes, you can use these on larger time frames. The same setup, just a different time frame. Okay? So if you like that kind of thing like me, you can look at these markets on larger time frames. I'll show you something else. I'm a farmer. I like grains. I trade grains. Here's a market that's trading sideways. Dynamic resistance, dynamic support, dynamic resistance, dynamic support, dynamic resistance. Sell, buy, sell, buy, sell. Okay? Same tools, just a different time frame. Okay? Different market. Okay? Now there's a big crop report tomorrow, so you're not going to monkey around with that. But again, my point is dynamic support and resistance on some larger time frames are pretty cool. Okay? Crude oil, notice dynamic resistance we're putting on a daily. Okay? We pulled back to the BBC. The weekly, we had the bearish cross. Normal thing for the market to do, gravitate toward the BBC. So maybe the crude will get hit 56 before we're all said and done. Okay? All right, so let's get back to our 4-tick range. Urban Outfitters, thank you. Okay, and as you can tell, crude's just laboring here, so we won't screw around. Let's go to the indices. Okay, we're just kind of trading sideways. All right, so look, kind of the market's kind of falling asleep here a little bit. Okay, are there any questions as I wrap things up here? All right, things to take away. Number one, get in the habit of hitting the zoom out button. That's going to make the difference. It'll allow you to see a larger landscape of the market, so you can find more support and resistance. That might be the difference between making and losing some trades because you took 2 or 3 seconds to zoom out. I'm not asking you to go at an hourly or a 15-minute to identify a trend. Just zoom out. Get in the habit. Number 2, get in the habit of activating this trend line and drawing them. Okay? The reason we do that, because we don't know if it'll get back to the BBC. Number 2, if the cycle turns color on you, it's required. All right, so get in the habit of drawing ahead of time so you're not fumbling around with the trend line. And if the market does take action, okay, you're not around. Okay, get in the habit of drawing the trend lines so that just becomes a habit. So when it does, if it does qualify, then all you're doing is going inside the DOM and buying and selling. Okay. You're training your eyes and your hands to do exactly that. Okay? So get in the habit of doing that. Okay? And keep an eye on the cycle. Okay? We want everything to be the same color. If we're looking for bearish opportunities, we want that cycle to be red and has a nice pitch to it. If we're looking for bullish opportunities, boy, we want that cycle to be blue and have a nice pitch to it. Okay? We want everything to be same color, ideally. That means less trades, I'll tell you that much. The house doesn't like that, but it's less trades. But it does put the probabilities in your favor. Okay? So consider that. I think that's it. All right? Those are the few takeaways we talked about today. Okay, you got a little action on the DOM. We at least were able to show you at least one trade in the DOM. Okay, so that was pretty cool. Any questions about that and how we do that? In the end, if you have questions about the platform, number 1, you got to download it. Okay, watching Michael do everything for you, it's not going to work. Okay, ultimately, okay, I created this support page because it has the brackets. It's got a CFRN DT Pro install on it. Okay, importing Mike's workspace if you really like that. Okay, it's got all the stuff that you need on this page. Okay, so in the end, if you haven't downloaded the platform, do it. Download the indicators. If you don't know how to do it, if you run into any snags, you know you can call me. Okay, because I'm the only guy that picks up the phone here. And I know what you're working on. And if we have to, we'll do a one-on-one GoToWebinar. I'll jump on your desktop and I'll tell you what to do. Okay? If it comes down to it. All right? And you know what? If you are already a CFRN member and you need some help, raise your hand. I'm happy to do it. Okay? We're in this together. So if you do well, I do well. And then I think lastly, if you're into larger time frames, okay, whether it's the grains or, I have farmers that use the same indicator set. Okay, we could talk about that. All right, everything's fair game. All right, so that's it. I'm gonna wrap it up. I'll see you guys in the room tomorrow, and then we'll talk about this stuff next Thursday for another hour. You're gonna hear me pound the same stuff over and over and over again. All right. So, all right.